Welcome to my channel, Accounting with Gawhar Baig. Now let's look at the journal entries for recording depreciation. For journal entry, depreciation in the journal will be income statement or statement of profit or loss will be debited, and the provision for depreciation account will be credited. As for the ledger entries, you have within the general ledger the provision for depreciation account. On the opening date, you have the balance BD, should be given in the question. The closing date, you have the income statement or statement of profit or loss, which is the depreciation charge for the year. Then you have the disposal, which is the total depreciation of the assets sold. And on the closing date, we have the balance CD, which will ultimately be brought down in the T account. We have an example here. The following information is available for Mr. Gorbig as at 1st Jan 2024. Office equipment account at cost $4,500. Provision for depreciation on office equipment account $1,500. During the year ended 31st December 2024, the following transactions took place. On 1st June, check issued for new office equipment $900. On 1st July, equipment costing $800, which was purchased on 1st May 2020, was sold for $600. Depreciation is charged at the rate of 20% per annum using the straight line method. In the year of purchase, a full year's depreciation is charged. In the year of sale, no depreciation will be charged. So let's prepare for the year ended 31st December 2024, the journal entries to record the depreciation or the charge for the year. To record the depreciation charge for the year, we have to December 31st income statement, or the new terminology, which is statement profit or loss, to be debited, and provision for depreciation will be credited. Now, as for the calculation of the depreciation amount, we know we have a 20% depreciation using the straight line method, and we have a policy here which says in the year of purchase, a full year's depreciation is charged, and in the year of sale, no depreciation will be charged. So as this policy goes, we can do one thing. We can add up the purchase value, which is this $900, and we can subtract the sold amount, which is $800. What we are left with is the remaining cost, $4,600. We can charge the depreciation. So the depreciation charge is 20% on the cost because we are using the straight line method. So 20% on 4,600, which goes to, so the depreciation comes to $920. So let's debit it by 920 and credit it by $920. Now let's prepare the ledger accounts for provision for depreciation on office equipment account. For this preparation, first of all, we need is the opening balance, which is given here on 1st Jan, provision for depreciation, which is $1,500. So let's write it here. Balance BD, 1st Jan, $1,500. Then at the end of the year, 31st December, we record the charge for the year, which is income statement. We already did the journal entry here, $920. The new terminology for income statement is statement of profit or loss. Then we have to go and record the disposal. because in the second transaction, what you see on 1st July, equipment costing 800, which was purchased on 1st May 2020, was sold for 600. So there was a disposal of non-current asset. So we have to record this disposal here. As for the calculation, let me show it in this working part. Since we bought the equipment on 1st May 2020, so we are using it basically for the year 2020, then 2021, 2022, 2023, and 2024. According to policy, in the year of sale, no depreciation will be charged. So we will not take 2024 in our calculation due to this policy in the year of sale, because we are in the year 31st December 2024. And as for the 1st of May 2020, since it's the year of purchase, in the year of purchase, we have a policy to depreciate it fully or for the full year. So let's go to the calculation, which will be 20% on the cost, which is $800 into, you can see here how many years are there. 2021 year, 2021 2 year, 2022 3 year, 2023 4 years. So we are going to multiply 4 years here. Then we place the value, which comes to 600, and the disposal date is on 1st July. Then we are going to go for the closing balance, which is the balance CD on 31st December. Which comes to 1704. And we have to bring down the balance for 2025. 1st Jan, balance brought down. So that's it for the recording of journal and ledger entries for provision for depreciation.